Great, thanks, Daniel. Okay, so real quick, what is a community development financial institution? There are 1,200, they're called CDFIs out there, and many small business owners and I didn't know that they even existed. And these are mission-driven financial institutions that provide affordable loans and financial services, also educational resources to those that struggle for a variety of reasons to access the mainstream financial banks. This could be because of non-traditional credit profiles or a lack of credit history. This could be those who are new to the country, for whatever reason, can't get a loan at a bank. The CDFI industry was built to target these kinds of borrowers and to really help close the wealth gap. We are federally chartered entities. Like I said, there's about 1,200 nationwide, and we're going to get into what exactly we do. Let's move to PCV specifically. So Pacific Community Ventures is actually a nonprofit community development financial institution, and we provide small business loans to California businesses. Our business model really combines affordable capital with free mentoring that Daniel mentioned in the beginning of the presentation to help small business owners build their businesses and help you thrive. There's lots of challenges, especially in today's environment, whether it be inflation, whether it be staffing, whether it be the uncertainty of COVID. And we are here to support you both with advice and capital. And our theory is that when you combine those things, we can really help you build and grow and help your business be successful. Here's a little bit of information on who we are and who we serve. We are very, very proud to specifically be focused on small business owners of color and that are women-owned. We serve communities across California. And a little bit about the impact we had last year. We deployed nearly $10 million of loans in 2021. 76% of that went to minority-owned businesses. This is a big, big focus of ours, and this is a differentiator of PCV relative to even other CDFIs across the country. 54% of that capital went to women-owned businesses, and nearly 90% went to low, moderate income communities. Next. So let's get into the meat and potatoes, all the good stuff. So who is eligible for a loan from PCV? Different lenders from mainstream banks to CDFIs have lots of different requirements. Ours are established by our loan policy and by our board of directors. So the first requirement is that the business is based in California. Today, PCV offers free mentoring nationally, so you have access to mentors across the country, but our capital is limited to businesses in California for now. The business has to have been in operation for at least 12 months. So unfortunately, at this time, we do not provide capital to startups. There are other organizations that focus on providing startup capital to new businesses. At PCV, we're looking for at least 1 year of business operations. Number 3 is that we require the business can afford to take on debt. So what that means is it's generating enough profitability to cover a monthly debt payment. Really, we don't want the business to take on more than it can handle. We don't want the debt to be a burden to the business. So we're trying to find an amount of a loan that the company can support from cash flow. We don't have any minimum credit scores. We're considered a very, very flexible lender that also makes us extremely unique relative to certainly the Main Street banks. In terms of what the money can be used for, our most typical use of proceeds are for some kind of working capital, for purchasing of inventory, also acquiring new equipment or maintaining equipment, or expanding the business in some way, whether that be hiring new employees, investing more in marketing, et cetera, to drive revenue. You must maintain appropriate business insurance. And lastly, right now we're excluding certain industries and certain businesses in the rideshare industry and the marijuana industry. Next. So a common question we get is what kinds of terms are available with PCV loans, and they range. So the loan size, as you can see on this sheet here, ranges from as low as $10,000 to as high as $250,000. Our average loan size is somewhere in the neighborhood of $60,000 to $70,000. The interest rates we offer also widely range from 0% to 13%. Most of our loans right now are about 4.25%. The different interest rates reflect different loan products. Last November, we launched what we called the Oakland Restorative Loan Fund. This was a truly innovative fund focused on 5 low-income neighborhoods in Oakland that provided 0% interest. So it was basically a repayable grant. That fund was launched at $2.5 million and has a few $100,000 left, but it's almost full. Our typical product right now is what we call a disaster loan. So this is supporting small businesses that have been negatively impacted by COVID in some way, whether that be on the revenue side, on the expense side due to supply chain issues, or inflationary effects on raw materials or transportation, et cetera. And this disaster loan offers a 4.25% interest rate. We're also one of the lenders involved in the California Rebuilding Fund. You can access that program through a website called Connect to Capital. And this is a statewide program really aimed at helping small business owners who were impacted again by COVID. And they match you with different CDFIs. We are one of, I believe, 10 CDFIs involved. And loans through the California Rebuilding Fund are across California. If they're in San Francisco, they have a 0% interest rate, and in all other locations across California are 4.25%. In terms of loan term, our loans range from 3 to 5 years. The smaller the loan, it's closer to 3 years. The longer the loan, closer to 5 years. All loans fully amortize over the life of the loan, meaning that they pay off in equal installments over the term of the loan. There's no penalty for early repayment, and payments are automatically withdrawn on a monthly basis on the first of the month. In terms of origination fees, very, very affordable. The average rate is about 1% right now. Some of the products have higher, some have lower, but again, this disaster loan product that most of our clients are using right now is 1%. We walked through the use of proceeds, and in terms of collateral, a personal guarantee is required for anyone who owns more than 20% of the company. And we'll move on to the next page. Okay, so in terms of application requirements, this is where when I talk to borrowers, it can be overwhelming, or they wish that they had prepared more. So if I want you to take one thing away from this webinar today, it really is what you can do now to prepare to apply for a loan when you need it. So as part of the process, we request several documents. All lenders do. And at a high level, the purpose of these documents are really to help us assess whether and to what extent the business can support a small business loan. Again, we want to be supportive and help you build your business. We do not want to put you in a position where you're struggling to make a payment. On the left-hand side of this slide are a list of documents that we request. And my advice is to think about how you can get these filed, get these prepared, and how you can understand the contents of these documents so you can help the underwriter of the loan understand your business and the dynamics of your business over the last few years. So the first set of documents are your business tax returns. We're currently asking for 2019, 2020, and if you have them, 2021. And this allows us to basically verify your business income and understand the performance of your business over the recent history. We also ask for a recent profit and loss statement from QuickBooks or Excel. We're asking for a full year 2021 if you do not have your 2021 business tax returns filed. And beginning this month, we'll be also requesting a year-to-date profit and loss statement for 2022 to see how your first quarter performance has come through. We also ask for the last 3 months of your business bank statements, really to better understand the cash flow dynamics of the business, to get a better sense for what cash is coming in and what cash is coming out, how consistent that is, etc. We ask for what we call a business debt schedule. This is really just to understand what, if any, debt you already have on your business. And again, this helps us calculate your total monthly debt payment, including any existing debt and the future debt that we might be providing to you. We also ask for personal tax returns the last couple years. This should be updated now to include 2021 once available. And lastly, at the end of the process, we ask for your authorization to pull your credit report. And this allows us, after we've done the financial analysis and looked through the business to understand what the business can handle, we look at your credit. And one point I want to make here again is to reiterate how flexible a lender PCV is. We don't have any minimum credit scores. And what we're most looking for in the credit report is really a pattern of debt repayment. And to the extent there were any issues previously for any reason, whether they be medical driven issues or divorce related issues, that they have been resolved and that you can provide evidence that those issues are behind you and you in recent history have been making payments as agreed. And as a reminder, credit is pulled for anyone who owns more than 20% of the company, because anyone who owns more than 20% of the company provides a personal guarantee on the loan. And lastly, on the right are a few questions in what we call our full application. And this is just our way of helping us understand what your business is, how you make money, what inspired your business idea, who your employees are, what clients you serve, etc. It's a relatively short application process, but it's helping fill in some of the color and to bring the financial statements that you provide to life and really help us understand the story of you and your business. So how does the process work? There's a lot on the slide. I'll try and boil it down into a few really easy points. First, we have an application on our website, pacificcommunityventures.org. You fill that application out and you get an email that invites you to set up an account on our loan application system called LenderFit. Your application is not complete until you go to this LenderFit site and start an account. On LenderFit, you're then prompted to upload a series of documents that we just walked through. Your business taxes, your cash flow, your bank statements, etc. And as you upload those, we have a team of credit analysts on our side checking to make sure that they've been uploaded and indicating to you on LenderFit that it has been reviewed. And to the extent there's any questions on anything you've submitted, there's a messaging service within LenderFit that the analyst uses to communicate with you. So as an example, if you submitted 2 pages of the tax return and you needed the full statement, within LenderFit, they would write back, thank you for submitting this portion of the application. We need the full tax return, and you could then upload it again. And after we receive the complete tax return, we would mark that step of the process complete. And LenderFit is very user-friendly. You can see each of the required documents, and as you complete them, the analyst checks them complete. After we receive all of the documents that we need to assess the capacity for the business to support a loan, the analyst does what we call an underwriting. That underwriting is reviewed by myself and a few others, and we decide whether we think we want to move forward. And if we believe that it's a loan that makes sense for the business and for PCV, we then ask in step 3 for your authorization to pull your credit. Again, we do this at the very end when we believe there's a likelihood that we can provide the loan, because we don't want to pull your credit if we don't think there's a high likelihood we can provide the loan. After you provide that authorization, we pull a credit report. we study the credit report, and any questions that come out of there, we either call or message you in the system. After that final underwriting step of reviewing the credit report, there's an internal decision made. And if we decide to move forward with the loan, then we move to step 4. We craft what are called loan documents, which is actually just the contractual agreement between PCV and the borrower, and then we fund the loan. And all of that should take, it sort of depends on how quickly you upload all of the documents, but after we receive all of the documents, a decision should be made within probably 3 to 5 days. And after a loan has been approved, we can get the loan funded within a week or 2, depending on how quickly we can get to loan documents. There's a few closing documents we require from you that can take some time to provide, but generally speaking, that's how long it takes. Moving on to the last slide. This is a question we often get, which is, what should I do now to prepare? So first of all, as we discussed earlier, you're applying for a loan. The lender wants to understand your business and how you make money and how they are going to get paid back. So as you prepare all of the documents for submission, really be sure you understand your story. Why do you need the money? What are you going to use it for? What are some of the challenges that the businesses are facing that this will help the business overcome? What are some of the opportunities you see for the business that you are excited to explore? The second one, establish good bookkeeping practices. The financial statements of your business really tell the story. This is how the lenders understand how your business operates. And so establishing a way to track your financials, what money is coming in, what money is coming out earlier than later, is highly, highly advised, whether it be in QuickBooks or Excel, hiring a part-time accountant eventually. And this is something that PCV on our business advising side can help you find a good bookkeeper, for example. This relates to number 3 on this list, which is prepare a 2021 profit and loss statement. One of the most common reasons an application doesn't get over the finish line is really that the documents aren't prepared, aren't ready. And this can be because somebody doesn't know how to prepare a profit and loss statement. And again, this is where PCV's business advising platform can really, really be helpful in helping connect you with someone who can help you prepare a profit and loss statement. Number 4, get your business and personal tax returns filed and available to share. This is an absolutely must-have, and that can take some time. So put that on your list. This is a big one, understanding any issues on your credit report. Again, I am proud of how flexible a lender PCV is, but to the extent there are issues that could be perceived negatively on your credit report, like some sort of charge-off or some sort of lien, be able to have responded to what is in your control. We are unable to, for example, finance a loan to a borrower that has a tax lien. So you'll need to take care of all liens before applying. But to the extent there was a bankruptcy in years past or some sort of large medical bill that has since been resolved, be prepared to explain that and know that at PCV, when we're asking questions about the credit report, we're really trying to come from a place of yes. We're trying to understand the context of the situation so we can help get you the loan you need to grow your business. And my biggest piece of advice is really to get an advisor. We've had so many examples of applicants who are looking for capital but aren't quite ready to take on debt yet. And we've hooked them up with a business advisor in multiple different areas to help them really get their business off the ground. And in some cases, they come back to our lending program and apply for an even larger loan, which we're thrilled to then provide. And so my biggest piece of advice is get an advisor, begin to think about how you're preparing for that loan application, get your documents in order, be thinking about how you're going to convey your story about what your business is and what you're going to use the money for. And we look forward to working with you. So in closing, before we open it up to questions, here's some contact information, pacificcommunityventures.org, where you can apply for a loan. And if your business is outside of California, there's a website here that we highly recommend through the Opportunity Finance Network that can help you find a CDFI in your region. And then you have here Daniel and my contact information, and we're happy to take any and all questions. So with that, I'll hand it over to Daniel.
Thanks, Robin. Great presentation. And I don't see any questions here in the chat or the Q&A. So we'll stay on for a few minutes in case you do have any questions that you have. We'd be happy to answer them. But yeah, a couple of common questions that we receive is, can someone that applies for a PCV loan, can they work with a business advisor even if they don't get funded? And the answer is absolutely, as long as you're in business. So you're not just in the ideation phase. So for our business advising program, we're very flexible in terms of who we work with. And if you're a business owner that, say, is a startup and you have an existing product or service and you've generated some form of revenue and you have an advisory need or a challenge that we know we have an advisor that could help address you with it, then we'll go ahead and get you matched. And we have a question here in the Q&A. Does a headquarters have to be a California business or just an office?
That's a really good question. It depends. Easy, how do you pronounce it? I don't know if we can speak with them directly, but I'm happy to follow up offline. I would say just an office might not be sufficient. It would likely need to reflect a substantial part of the revenue base in California for it to qualify, but happy to take that offline as a follow-up. I appreciate the question.
Great. And there was a second part to the question. How long does a business have to be in California, though more than 5 years old?
Just a year, yeah. So if the business is 5 years old and it's expanded to California, yeah, just a year.
Thanks, Robin.
Yeah.
Another question that I receive frequently is when a borrower does get funded and they start working with a PCV advisor, they ask what kind of advisor can they work with? And we have a range of different advisors. So we could get you matched with a financial advisor to help you budget and spend your loan properly. Or if you feel confident in that area and maybe you're interested in working with a marketing advisor or an HR advisor, then we could absolutely support that as well. Really all functions of the business. We don't specialize too much in legal or law, but if it's in sales, marketing, HR, operations, leadership management, finance, those are all areas that we have many advisors that could help you with.
I'll absolutely contact you. Appreciate the question.
Any other questions for us? Robin, I have one question that I get from borrowers quite frequently. Do you have any tips and tricks on how to expedite the funding process?
Ooh, that's a good one. I think that comes down to preparation. The fastest applications are those that provide the documents the quickest, because we can't really start our process until we have all of the information we need to perform the underwriting. So I definitely say the preparation, meaning getting the business taxes filed and collecting your profit and loss statement, the bank statements, etc. Also on the credit piece, that can sometimes cause a delay. So being able to have For example, documentation, if there was a past due amount in the past that you have arranged to have a payment plan on, being able to explain the original context of that issue and then provide documentation that you're on the payment plan and have been meeting the payment plan for some time. Having that readily available will help expedite. And then just being available and open to answer questions also helps.
Great. Okay, so if no other questions, then we'll go ahead and end this presentation. But if you think of anything after this presentation, you have our emails. Feel free to send us an email. If you have any questions about lending, go ahead and email Robin. Any business advising questions, feel free to email me. And thanks so much for joining us today on your lovely Friday, and hope you all have a great weekend.
Take care. Thanks, everyone.
All right, thank you. Bye.